Welcome to News.Markets. A sector that weathered the global recession is struggling amid weak global recovery. Global steel has fallen in value by a third since the turn of the year, reaching a price last seen during the depths of the recession in early 2009. The World Steel Association now forecasts that global steel demand will contract by 1.7% this year, largely driven by a drop in Chinese demand. Is the steel industry in crisis? Well, Edmund Shing, Global Head of Equity and Derivatives Strategy at BNP Paribas, is here now. Thanks so much for coming in.
Juliet.
What's going on?
Well, what's going on, Juliet, is that the Chinese, who are the biggest exporters and makers of steel in the world, are running out of domestic markets in which to sell their steel, so selling their steel at any price abroad. They've overinvested in the past, and now, of course, all this new supply is hitting the market and squeezing steel suppliers worldwide.
Is it all about China, though, or is that maybe misguided? Are there some other pressures going on?
There are always other pressures going on, but it is a commodity sector, and it's always a question of supply and demand, and the real driver is oversupply, and it really is China, because if you imagine today, Juliet, that China as a country exports as much steel as the second manufacturer in the world, Japan, actually makes, just to give you an idea of the scale of how much steel they're dumping on world markets today.
So let's look at this from a company's perspective. I mean, Tata Steel, that's been shrinking its production in the UK.
Yes.
What's the outlook for British Steel?
It's terrible. It's fairly terrible because, unfortunately, it's relatively high-cost steel. If you look at Britain as a location for making steel, clearly we don't have the supply of coal that we used to have. We don't have the supply of iron ore readily nearby. So, in other words, when you add all of that plus the wage situation, we are relatively uncompetitive when you compare to the Chinese or other emerging markets. So, in a global market, the high-cost producers tend to lose out, and that tends to be Britain.
So high-cost producers losing out. What about the European pictures? Because those are the companies that the investors can really get into, isn't it, in terms of
Well, I think,
steel?
again, with the steel sector, because it is such a heavily cyclical sector, you know, it has very high highs, very low lows, I always caution against getting in too early. I think that this deflationary pressure on steel prices is set to continue for some time thanks to China. So I would not rush into the sector. I think you need to see bargain basement valuations before you get in, because we're not sure when the price levels out, and you've got to be pretty sure the price is on the way up before you start to buy steel producers.
So outlook then for ThyssenKrupp, for example.
ThyssenKrupp's an interesting company because, of course, they don't just do steel, they also make elevators. So they have a bizarre mix of a commodity business, and actually lift business is a fantastic business. So it's a bizarre mix, but again, I would say for ThyssenKrupp, hang on, wait, because it probably will get cheaper. And as a value investor, this is the risk you always take. If you buy a value investment, you often buy too early. So I would say wait for the upturn and in steel prices before you dive in.
Even with a company that's got that spread?
Even with a company that's got that spread, exactly, because you can buy speciality lift makers like Kone in Finland rather than have to take the bet on ThyssenKrupp and buy the steel business with it.
ArcelorMittal?
Just as bad. In fact, probably worse. Again, India it's under extreme pressure in terms of steel prices, as is their European operation. So they should be able to weather the storm better because they're much bigger. So they can rationalise operations globally because they have global operations. But that being said, again, there's still going to be pressure in the short term, and you really want to wait for the steel cycle to turn before you buy these things, because frankly there'll be so much upside. Even if you miss the first 10-20%, there'll be plenty left for you.
Okay, and when's that upside going to come? Because it sounds to me that you're expecting things to dip even lower.
Absolutely.
Before things get better.
I would say
a
minimum of 3 to 6 months from here before you think of dipping your toe into the water in steel stocks. And
what are the things that could happen to change that trajectory?
Well, you could see more reduction of production quicker, i.e., for instance, in the US steelmakers shutting down plants, and that therefore reducing global overcapacity to the point at which steel prices can rise maybe faster than we expect. If that happens, then you could start to dive into the European steel makers. But I think that's a low probability. Typically, this type of overcapacity takes quite a long while to remove from the global market. So I would be patient.
Be patient and wait for the cycle to turn.
Indeed.
Edmund Shing from BNP Paribas, thanks very much.
Thank you.